this is a video for GBP AUD. I'm just marking up today why, with a quick explanation as to why price has created a new low, hitting the 159 zone, and how that relates to the next buying point, which is currently in play and taking us to the next supply level, roughly between 187 and 190. And I'll be running through the reasons as to why this imbalance appears here. So, taking a look on the 6 monthly first, it's pretty important to gauge the literal half-year trend as to where price is taking us. So, adapting this trend line roughly like that, albeit, and take it from here. Yeah. So, as we can see, the price has taken us very, very sharply within the curve, and also provided us with a floor level back in. There you go. Back in 2013, which is hitting the bottom low. So around here, between these three white wicks, which are my bullish wicks, on that year and a half, we have provided a great reversal from the very bottom, which is headed to one last recapture of the very bottom, pinned into the market low, all-time low. So we can draw our wick around this. And the reason why is because it captures both the half of the candle, encapsulates this, and also takes the entire body of this candle here and incorporates the low. Albeit most imbalances will be taken like this, or in other respects like so, where the very low tap will be ignored on a 6 months. But lower time frames, it can be picked. It depends on how reactive this wick is. I can't tell from here. Let's keep it like this for now. And then what we do is we'll go down to monthly, because this can now be our monthly zone. The candles of interest here, straight off the bat, is as to why we've had a reactive and now a tap of the zone for reaction number 2. So these 3 candles here are your bearish black soldiers, 3 in a row, meaning that the curve, which is now complete, which is amazing. It's a very high curve, and price literally broke it right there, right on that very bottom, and then 3 months subsequently, 4 months, 5 months subsequently, had provided the bullish engulfing, which had 3 times maximized this one here, and at least doubled half the departure here. So essentially on your monthly, we make this 6 month zone white, I can make the monthly blue, going with the standardized key. So since then, it's never been reacted. You can, however, draw it around these 2 if you so wish. The reason for that is because the curvature is now broke. It's been retested since the low, and it now encapsulates 2 months worth of data, 3 months worth of data, sorry. It also encapsulates half of the departure height of said monthly engulfing. It just provides a more claritable zone for yourself when you're trading and marking up. This was an interesting one. It blew me right out of the bat. Completely missed this level here. So focused on hopefully going long for so long, and got caught out on my positions. I mean, yeah, looking back in hindsight, you can't catch them all, but it is what it is as a trader. You know, you take your bias, you go with it, and when things change, you change and adapt. So yeah, this is the level of interest here, which incorporated the low. It also captures this departure here, so break and retest on a monthly, hitting the trade range here too. So that has been captured there. The curve is strong, has been broken since here on the monthly. And now we're in this subsequent zone here. So where my point of interest is for a monthly supply will be here. So I'm looking roughly between, and this is FL, 192 and 186. So ideally 187 will be a minimal target here for me. And the reason why is because the weekly will show the upthrust into the departure final arrival zone, and price will nicely reacted, to create a original supply here. So the main supply zone, of course, was back here, a massive candle, which sits right on top of it, which was absolutely incredible back in 2020. Let's see if this does this, depending on the index movements in future, although it's not entirely cyclical and negatively correlated at present, nor positively, but positive correlation here is important for GBP and indexes. Albeit we're going for a different market cycle at the moment where no asset is really safe unless you are plowing your money into US dollar. So yeah. Anyway, enough of that. The fresh level here is a new supply as it's been untapped. So if we go into the weekly, we can see, if I just keep those present as well, the weekly, that will help. We can look for a weekly imbalance in said levels too. So in the weekly, we have a strong fresh level, which we'll be looking to. Yeah, I can see a nice one here in these three candles. So I'll be drawing my level from here. This is my weekly tap, and this is where I would like to see a target for longs to hit. And yeah, it's hitting 188, sorry, not 180. We already hit 180, so this level here is a perfect imbalance tap in the past here, and we're looking to test that again right now, albeit close enough, right? So that is great. This is a great opportunity here for a fresh level to buy from, subject to falling back down to 177. And also on a 4-day, it helps a lot easier. Looking for a fresh level again. It's been pure bullish. There's no real indication at the moment that this will not be hurdled in terms of a 4-day. We'll make that red. So price is nicely pretty much equated to the high. Now it's a fresh 4-day level, being a first real penetration into the zone, and this can become a PCP, subject to price tailing off, looking for a pivot level within this weekly, falling back up, and then breaking said high, then retesting the zone and walking up to the next level, which is a monthly and weekly respectively, as part of the FL. So that is one pathway. This is a tough zone at the moment to provide a clear indication. So we're going to drop down to the 2-day to see if we can find anything. So there is a 2-day zone. Yeah, it's not great, but price action shows that price could easily come back to this level. And we'll chuck that there like that. So if price easily falls back here, we can bring price here, create a new bullish movement as prices consolidated a lot between this range of data. It's very messy, but this is very fresh. and still sticking with the pattern, it still incorporates a very high curve. So it needs to be broken on the short term in order to come back up and remove this PCP zone. So I hope that helps. Again, if you're looking for longs, trade with confirmations as always, follow the rules of imbalances and supply and demand. It's very important. And yeah, as always, any questions, very happy to answer.